the Uganda Stock Exchange, and several other exchanges. Definitely, this is the first show when it comes to investment and saving. It happens every weekday, Mondays to Fridays, at exactly 10 a.m. East African Standard Time. And of course, Smart24 TV makes this possible by giving you 24 hours of business information, business entertainment, 7 days a week. And of course, this is one of the things you should always be looking out for. If you're looking for a way to put some of your idle savings to use, definitely this is a show you can be able to engage in. Remember to engage in conversations on Twitter at Smart24 TV, that's our handle, as well as the hashtag financial markets, where we talk financial markets in East Africa, as well as the global outlook of financial markets, looking at cryptocurrencies, foreign exchange, looking at the collective investment schemes, the bond market, the stock markets, and all that, of course, on our platform there online. And you can get to give us your opinions on the current state of things as well. And we'll be able to share, of course, with the show here, and definitely bring you some experts once in a while as well. Remember, the show is proudly brought to you by Altex. Altex is your #1 private stock exchange, and now licensed by the Capital Markets Authority to carry out the trade of different stocks, as well as the bonds on the secondary market here in East Africa. Now, Altex, partnering with MTN Momo, are bringing you Zabu. Zabu is an initiative that helps people access the bond market. Treasury bonds, for those of you who may not know, are simply loans, transferable debts or loans to government. And these are from mainly the public or even institutions or investment clubs whatsoever. And so these bonds, of course, are issued by the Bank of Uganda, of course, for the government of Uganda, in order to raise money to finance the budget of the government of Uganda. And they're issued at interest rates, very favorable interest rates there. And of course, the bonds are a bit longer term compared to the treasury bills, which are similar instruments, but on a shorter term, talking about 1 year or less. And the treasury bonds have a much longer period, or holding maturity period. And this is about 2, 3 years, 5 years, 10 years, and 15 years, as well as the 20-year bond now in Uganda. Now in Kenya, they even have 30 years and so on. Now these bonds, of course, are one of the things that people look at investing in times of uncertainty, because one thing is, you're probably 100% sure that your money will return to you because government is not a defaulter. And so that's one very outstanding advantage that you have when you are investing in the debt market. Now, Altex is now partnering with MTN and saying, hey, you can now lend to Kenya, the Kenyan government, in Tanzania as well as the Ugandan government, with as little as 15,000 shillings. And that 15,000 will come with a return. Trust me, this is possible, and it has been done before, and it's going to be done. Now, 15,000 is the minimum amount, but even if you have 1 million, even if you have 1.5, even if you have 1 billion shillings, it doesn't matter what buy or even sell these financial instruments on the secondary market. Of course, we are looking at the secondary market. It's not a primary market per se, because the Bank of Uganda is really in charge of that. But Altex is now giving you this chance to be able to participate in this particular kind of activity. And of course, Altex now opens at 15 minutes past the hour of 8 and closes at exactly 15 minutes past the hour of 3 p.m. East African Standard Time. That's what we're looking at. And of course, one of the things you should be looking out for when you are surfing the internet is Altex East Africa. Most welcome to the show. Of course, today we have a lot to talk about. Yesterday was World Savers Day, and if you followed through, there was an event at Kampala Serena Hotel, and in attendance was, of course, different heads of financial regulatory institutions, CEO of the Uganda Institute of Banking and Financial Services, executive service secretaries, the Uganda Bankers Association, NSSF Managing Director, Mr. Byarugaba Richard, and so many others, media, and so many other people attending this event at Kampala Serena Hotel to commemorate the World Savings Day, the annual World Savings Day. And I want to begin the show today in a way that we get to pick some of the words of the deputy governor of the Bank of Uganda. This is Dr. Michael Atingi Ego. Now, on this event, of course, we commemorate and celebrate savers and also encourage people to save money for emergencies. And when, of course, while talking on this event, Dr. Michael really stressed the importance of saving, and not only saving, but saving and investing, which is what this show is all about. Now, in his own words, he said that our work is clearly cut off because of the financial because of the financial capability survey that showed that only about 15% of Ugandans save their money in deposit-taking financial institutions regulated by Bank of Uganda. We're talking about most of the commercial banks we all know about. Now, about giving about 15% of these, of the entire population here in Uganda saving, we have only 17% saving through mobile money. And this is saving on a very, very short-term basis. Now, up to 44% of our people, according to Dr. Michael, we have about 44% of our people rely on village savings and loan associations as well. 42% resort to taking boxes at home. Of these, of course, these are loan schemes or village circles or the Bibina Biabachala and so many others that we all have in our own different respective communities where we hail. And he's saying these are currently 44% of them carrying boxes home, which is a culture we want to really address. Now, he said in his own words that we urge every stakeholder to build an inclusive, vibrant and safe green finance ecosystem that will crowd in all those savings money at home. All those saving money at home. And he said that the stakeholders have planned several commemorative activities for the World Savings Day this time round. And these activities include radio programs, a savings challenge running from November 2022 to November 2023, where everyone is encouraged to use formal financial savings products linked to specific goals, and dedication of November as an annual banking and financial services month, and public webinars on savings and financial literacy, among others. Of course, Uganda is one of those countries that has a very poor saving culture, even based on statistics from the Uganda Bureau of Statistics. We have very few people with bank accounts, very few people with investing in collective investment schemes. Of course, this data changes and we see improvement here and there, but still, it's still on a slow rate. And the challenge is not really about saving. People really do save. You find a daily earner in Kampala saving maybe 10,000 a day. And they put this money aside, honestly, they do. And that's the first step. But the challenge is, when you get this money and put it in a box and put it under the bed, it's like taking one step forward and then taking two backwards, because this money is going to lose value with time. You have to make use of this money. Idle money is not a good thing. And idle money is what leads to inflation. As you can tell, it's one of the things that could lead to inflation. People holding lots of money in their houses, under their beds, or on dormant accounts, and so on. This is not good money because it makes the money lose value. So the Bank of Uganda prints money thinking that, hey, this money is going out there to the public and it's going to do something. It's going to be productive. It's going to be used in industry. Yet what happens is actually people are keeping this money in boxes. And it's a very bad culture. Now, what are the options for you? Of course, there's so many things you could do as investments. But one of the things you need to consider is financial markets. These financial markets give you a kind of a window where you can indirectly become an investor. You don't have to really wander around trying to look at your investments and see how they're progressing. You don't have to always. No, the financial markets give you that peace. They give you that comfort. Of course, not 100% because there's some risks involved and some bit of research and work to be done in the background. But it's not as harsh as probably getting to invest, for example, in agriculture, where if it doesn't rain, your money is going to be lost. That's it. There's nothing. You don't have control over the rain, okay? Or if you're going to do farming with irrigation, then you need to set up a facility for irrigation, which is also going to cost you money. But in the financial markets, it's a place where you can invest your money and sit at home and do your business and go to work normally without worrying a single day. And so, fellow Ugandans, as we commemorate the World Savings Day, I call upon you to start saving, but above all, start saving and investing and making your money worth it by making that money make more money. There's nothing more beautiful than that. Having money making you money. That's the beautiful, very beautiful way to live your life. And so financial markets will give you this chance. Of course, they are diverse. Various segments, products have been created for the consumer consumer protection, but also consumer acceptability and accessibility. So you can invest in the different asset classes based on the nature of your maybe risk appetite, maybe the nature of your likes and dislikes, or even the returns. You could say maybe this particular investment gives me more return. And of course, we have very many options that you can choose from. One of them is the stock market. And in the stock market, we're looking at listed companies like MTN, Stanbic Bank, Umeme, coming on board and saying, hey, we need capital. And they don't want to go to the banks because, of course, now banks are very expensive to borrow from, given the high interest rates we all know about. And this is, of course, not their fault. I mean, there's inflation in the whole world, so why wouldn't the banks have high interest rates? But hey, they can come to this public and say, well, we can get money from the public through an exchange, which is a company or rather an organization that gives you a chance to get the borrowers to meet the lender, right? And the borrowers in this case are the companies, and the lenders are you and me, the public, buying shares into these companies. So the companies, in order to reward the public for getting to trust them with their money or with this investment, they offer issues, or rather they issue shares to these kind of investors. And these shares are kind of given out as a reward for your contribution. And this share gives you a mandate to become an owner of the company. You're literally employing the chief executive officer, the marketing directors, and so many other people employed in the company, because you are now owning part of a company. So this is the kind of market we deal in. And if you're new to the stock market, this is how it really works. It's quite simple. There's no rocket science at all. Companies looking for capital coming to the public. The public has money that they're keeping maybe in the bank, and they want to put that money to use. So they invest in these companies. And these companies, in reward for the shareholders' trust, give shares to these different investors. And these shares help them, of course, earn some money in several ways that we can share on the show anytime, including dividends, including bonus issues, including being able to take part in the company's decision making, and so many other things that can definitely come, and privileges that come with being a shareholder in a big company. People sell their shares and make money. It's so good. It's a market really that gives you leverage over your savings. And so that's just one way. Of course, the bond market is also there, where we're seeing lending to government on transferable debt instruments. Transferable in that I could lend to government today, and tomorrow I feel like I need back my money. I transfer that debt to someone else. Someone else carries on that debt. And you don't just carry the debt, you carry the interest as well. Because lending to government is not free. Government has to pay you for lending to it. And so it pays you through what we call a coupon, or a coupon, an interest that comes in as a percentage of what you have lent to government. And it comes in every after 6 months for treasury bonds, and at the end of the maturity period for the treasury bills, which are the shorter term instruments. This is also another segment. We also have the exchange traded fund. Exchange traded funds are also part of like the stock exchange, and they give you kind of leverage to get to leverage some of the stocks that are kind of in clusters. For example, you want to invest not in one company, but in 100 companies on the stock exchange. How do you do that? Well, you buy an exchange traded fund, ETF, and this ETF contains all those stocks, and you can be able to chop down your money into different sectors and invest in different sectors, still diversifying and reducing the risk in case of a loss. So this is the thing that we are talking about. You don't have to keep money in the bank if it's not making you money. Of course, there are fixed deposits, which are very, very good. Of course, I would advise anyone to go into fixed deposits if you think they are giving you enough return. But if you feel like there is another investment that gives you better return, get out and get into this other investment. We have now the unit trust fund. Ladies and gentlemen, you have an opportunity to invest in all these things I've mentioned without even learning a single thing, through a collective investment scheme, or what we call a unit trust fund. And there are unit trust fund managers, or generally known as fund managers, like Sanlam, UAP, Old Mutual, you have Britam Asset Managers, Zeno Investments, and the like. All these guys will be able to get you these investments in stock markets, in the debt markets, in ETFs, in different other sectors of the financial markets, and they will do it without your participation because they are professional. This is what they're paid to do. And so the collective investment scheme is another way, as we commemorate World Savings Day, of course, in partnership with Bank of Uganda. You have to get to see how impactful these investment schemes have been and understand really how they work. They don't cheat money. They're not Ponzi schemes like we've had in the past, in the recent past, having Ponzi schemes where people are cheated of their money without their actually knowledge, not knowing that these are Ponzi schemes. Well, collective investment schemes are not Ponzi schemes. They are investment schemes, like the name goes, where we have collection of different investors' funds and putting them into a basket or a pool, and we kind of share this out in different investments. And when the return comes, we still split this return depending on how much each person invested, and they are rewarded. Simple as that. And the fund manager earns a little bit, about 2% or even less of the return. So it's a quite interesting way of seeing things. And if you have been watching financial markets and you are an ardent viewer of this show, I have always mentioned here that we cannot afford to keep money in boxes. Again, and I will say it again, we have to make use of our money to make extra money. And that's something I want to leave you with as we commemorate the World Savings Day yesterday. Putting that aside, ladies and gentlemen, let's get into the stock market news and see what's making the headlines around the world on the global markets. Now, the stocks on Tuesday in the United States declined a little bit as another batch of earnings rolled in for investors and awaited the several, of course, different comments and statements from the Federal Reserve policy meeting and jobs data later this week. The S&P 500, or commonly known as the S&P, but the Standard & Poor's standard average there had about 0.1% off at the midday trading on Monday, and the Dow Jones on Tuesday rather, and the Dow Jones Industrial Average ticked lower, nearly about 0.2%. You can see. Remember, the S&P 500 is an index, and an index is a tracker of the aggregate performance of different stocks. And this S&P 500 particularly tracks the top 500 American companies in the US stock market. When you look at, for example, the S&P 500, let's see what we had. On the S&P 500, we still had a little bit of decline as well on the S&P 500 at about 0.1%, and the Dow Jones Industrial Average declined by close to about 0.2%. Looking at also the Nasdaq. Nasdaq is the technology, companies index. Mainly, you have in Google, Facebook, and most of these other stocks that are dealing in tech listed on this exchange, and also on the index. It fell about 0.4%. All three indices had risen at the start of the session. Of course, we realized at the start there was a little bit of rising, and so there was a little bit of hope. But later in the day, we saw the stocks decline. Investors digested economic releases on Tuesday, including the job openings and labor turnover survey that found that job openings unexpectedly rose in September to 10.7 million from 10.28 million last month. Economists had expected openings to decrease to about 10 million, which would have been in line with the kind of cooling of the Federal Reserve which it wants to see on the labor market as well. Meanwhile, the October ISM manufacturing PMI index fell to 50.2. Meanwhile, and while economists surveyed by Bloomberg estimated about 50.0 actually earlier this month. The ISM manufacturing employment index rose to 50.0 from 48.7%, and as economists surveyed by Bloomberg had expected or estimated about 53.0 there. The stock market moves came after the major indices lagged on Monday as investors prepared for the Federal Reserve rate interest hike. And that decision, of course, is going to be made today. So if you're an enthusiast of the US stock market, you should be putting your hands on deck and seeing what the Federal Reserve Bank has for you right there on the US stock market. Remember, like we have the central bank rate here in Uganda, which is determined by Bank of Uganda, of course. They also have the Federal Reserve rate there in the United States, because the Federal Reserve Bank is the central bank of the United States. And this determines a lot. If you are an economist out there, or if you've heard about interest rates, you know how important the central bank rate really, really is. And so this is what we are also witnessing on the US market. There's been a competition, of course, between, for example, the yields on the 10-year Treasury bond in the US market at 0.4%, sometimes rallying between 0.45, 0.49, and so on. And so there's always that kind of competition between the yields on the Treasury notes and also the stock markets. Usually they do move in opposite directions. When one is doing pretty well, another is doing pretty bad, and people are running to one side and another. And this is the way really the markets are. And we're keeping our eyes on the Federal Reserve Policy Committee today, seeing how it's going to fare in that last day of the meeting, the Policy Committee meeting. Of course, the rate has been hiked in the last few months very aggressively by the Federal Reserve Bank there. Similarly, here in Uganda, we understand currently we are at 10.0% after hiking it about 3 times from 7%. So similar occasions are being witnessed still here in the Ugandan market. But all this is to curb inflation, which is still grappling the economies of the world, Uganda not being an exception. So this is why we are still, of course, having to keep our eyes on the central banks around the world, especially the US Federal Reserve Bank. Coming away from the US stock market down to Africa, different exchanges had a bit of staggered performance on the African stock markets. And checking out here, we're seeing Ghana stagnant at 0.0, and a very big gain on Johannesburg Stock Exchange yesterday, and Nairobi also declining, as well as the Uganda Stock Exchange. We are going to take a quick breather, and we return with those details for the African markets. Very pertinent also to you should be the regional markets and the Uganda Stock Exchange news as well. We take a quick breather. The show is proudly brought to you by Altex East Africa. We return shortly.